Now joining us to talk about the stock market and the top five and best and worst performers of the year to date on the Philippine Stock Exchange Index is Manny Ocampo, Senior Managing Director at Investment and Capital Corporation of the Philippines. Manny, welcome to the show.
Hi, morning, Mikey.
Good morning, Manny. Manny, the PSEi index is at 6602. Earlier in the session, it had fallen to the 6500 level. Clearly, we're not getting the traction that we'd hoped for. Why is it that we're lagging behind our Asian peers? What's holding us back?
Well, Philippines, unfortunately, there are still the inflationary concerns given the recent typhoons that have hit us now. So we will seek guidance, I guess, from where the U.S. Fed will post, whether they do their anticipated 25 basis point rate cut next week. No, at about the same day when we find out U.S. Fed's action, the BSP will also be taking action or no action. I guess let me put it that way. No, on our own rates.
Given the inflation in the U.S., within expectations, and inflation here within expectations as well, are you pricing in a 25 basis point reduction for both the Fed and the BSP?
That's the default. I think people are maybe anticipating. Do we look at a situation where BSP says, I'd rather be conservative and hold back, wait for where inflation comes out next year.
Now, earlier in the newscast, we had a story. The Organization for Economic Cooperation and Development, or OECD,
Right.
They suggested listing state-owned firms on the Philippine Stock Exchange to help rev up our sluggish stock market. What are your thoughts on this?
Well, they really should, I think governments should positively look at that kind of recommendation. Unfortunately, SEC is maybe one. Department of Finance is maybe another of those agencies that will push for, something like that. But the line agencies that take care of the GOCCs, that's a different story, Mikey. No? Now, I think in yesterday's conference, the suggestion to take maybe land bank public, maybe it's something that should have been done a few years back. For land bank. Government should also take a look at its property holdings. There are quite a few GOCCs that control large tracts of land that enter into 25-year, 50-year leases for these properties. And these are all eligible for real estate investment trust, for them to recycle capital rather than wait for cash flows over the next 25, 50 years. No, they can encash that right away with by structuring REITs for their properties. No? Thirdly, maybe government should also take a look at the private sector corporations. It's granted concessions to tollways, waterways, even airports. Take a look at that. These are shall we say, public convenience matters, and the public would probably want to be part of or become shareholders of infrastructure that they go through every day.
Just an estimate, how much of an increase in market activity might we see from this, given that in the Philippines, over 100 state-owned firms with assets over more than 11 trillion pesos. How much upside could we see in the market?
Okay, based on what we're seeing, at least from some of the publicly available numbers, you're looking at upwards of maybe $10 billion in possible capital raise for these state-owned companies and private sector companies that have been granted concession.
And at the same time, these state-owned firms have the ability to improve their performance because it's going to be subject to stricter rules. So it sounds like a really interesting initiative. Okay, now moving on. taking a look at the top 5 best performers year to date. So when we say year to date, we mean January until present day. Top of that list is Converge. Converge's shares are up 92%, meaning if you bought these shares in January of 2024, you'd have an upside of 92%. What do you think of this challenger brand? Do you think that it's going to be able to maintain this solid double-digit growth coming into 2025?
Okay. Converge, I think this year was if you'd like, a recovery year for them. They've posted very strong revenue and net income growth. I guess they've been able to reposition and really adapt into a market that has transitioned from a lockdown state to one that is more open already. Where people are going back to work, etc. So they're providing new packages, new new services to improve their revenue and bottom line. So
Yeah.
that's quite interesting. They've improved net margins, for example, from 24% to 27% this year. Revenue growth at 14, net income growth at 30%. So solid numbers
Yeah.
behind them.
Solid numbers,
Now-
up 96% year to date, and maybe perhaps more to come as connectivity is the basis for modern life. Moving down that list to number 2, up by about half a percent. About 55% year to date is ICTSI, up by 60% as of today, or rather 60.1% year to date. They're capitalizing on growth opportunities globally. Are they well positioned for even more growth?
ICTSI will probably start, taking over a few more ports in the Philippines, so that solidifies their presence in the Philippines. Being made up of 7,100 islands, there's a lot more space that they can grow domestically.
All right, let's move along quickly so we get to cover more ground. Next is Metro Bank. Metro Bank up by about 50% year to date after its 9-month net income up 12% year on year. And they're going to benefit from lower interest rates, lower interest rate environment in 2025.
Yes, they are benefiting from that, and Metro Bank has maybe recalibrated its focus on medium-sized businesses where they get better interest margins. They're not your traditional banks that rely maybe on trading income. They're more your traditional bank that rely on net interest margins rather than forex trading or trading income and all that. So very solid. So again, their clientele is pretty much mid markets and Filipino Chinese accounts, and these have been growing steadily over the past year for Metrobank.
Yeah. Another solid firm, Century Pacific Food. 9-month net income up 14% year on year to 5.3 billion pesos. The stock is up 45.23% year to date on growth from its branded marine, meat, and milk segments. What do you think about this stock as we come into 2025?
Well, the management continues to do well with their branded products. So that has been very solid, and they've really been growing over the past, consistently over the past 5 years or so. Even during the pandemic, they were there, and now I think they're going on targeting upper end markets as well.
Okay, moving on, let's take a look at the worst performers for the PSE Index in 2024. And might they be able to turn this performance around as we come into the new year? Topping that list is Bloom, PSE's top laggards. This list is wrong. The top laggard is Bloomberry Resorts. Their shares are down as of yesterday by about 46.3%. This is another Razon-led firm, so he's got something that's up and he's got something that's down. Solar North, not an encouraging bet, no pun intended. Gaming volumes also declined in Entertainment City. What are your thoughts on this firm?
Well, maybe I think what Soler North did was to take away, cannibalize maybe volume or traffic away from the established Soler in Entertainment City. I think what would have probably made sense if the other casino was maybe moved towards the Clark area. That would have probably been a better way for them to, spread out. But I guess the North and the Entertainment City are just, it's unfortunately eating into each other's market. Now, you also have a situation where, I think across the board, we've seen a slowdown in the entry of high rollers into Metro Manila. So that's a bit tricky. We hope that the volume picks up for Clark is actually encouraging. We've seen more volume come by that way, and that's because of access to the airport, etc. And new casinos growing up in that area.
Okay, all right. Thank you, Manny. That's all the time we have for this interview and for this show. So we'll leave it at that.
Thank you, Mikey.